Yeah, as you can attest to, it's definitely harder to buy a multifamily property, but it's not 100 times harder to buy 100 unit than it is to buy a single family home.
For
right?
sure.
So,
well said.
the money scales, the assets scale, but the work doesn't.
Welcome to the Threefold Real Estate Investing Podcast. This is the podcast where you'll not only learn how you can achieve massive success in multifamily real estate investing, but also how you can simultaneously pursue great relationships with your family and a better walk with God. You can achieve financial freedom through real estate investing without sacrificing the relationships that mean the most to you. Now, here's your host, Lee Yoder.
Welcome back, Threefold listeners. I hope you're having a great week. We've got a great guest today, a friend of mine back for the third time. We're pretty sure it's the third time on Threefold Real Estate Investing Podcast. Brian Briscoe is joining us today. The last time he was on was episode 66. But real quick about Brian, he's coming to us from Idaho Falls, actually new location. We're going to get into that, but he's been a general partner on 655 multifamily units worth $50 million. He's been the lead sponsor, asset manager, capital raiser, and key principal in these properties. He has developed a multifamily education community called the Tribe of Titans that helps aspiring investors learn the game, network, and with other like-minded professionals and get their apartment investing business to the next level. He's the founder now of Streamline Capital Group, which will continue to acquire multifamily assets well into the future. And he retired as a lieutenant colonel of the United States Marine Corps in 2021. Brian, thank you for your service. Long career of service. Congratulations on the retirement. Congratulations on the big move. I want to get into all that. Brian, if people didn't hear your previous episodes or haven't heard you on the dozens of other podcasts that I know you've been on, give us maybe just a quick background of just like how and why you got into real estate.
Yeah. I mean, I think the story has to start, over 20 years ago. Once upon a time, I wanted to be a math professor. And I think I've always been good with numbers, and I've always realized that, based off of a math salary, math professor salary or any real salary to begin with, I realized this like 25 years ago that, getting to that $1 million mark, growing your net worth, you had to do something more than just a W-2 income. Right. So, but yeah, I was, got a bachelor's in math, master's in math from the University of Utah. Served a mission for my church in Chile, northern part of Chile, and was continuing my education. And I was in a PhD program on a track to become a professor. And then September 11th came, and we had terrorist attacks in DC and New York, and I really thought hard about next steps, and I decided that going active duty was the right thing for me at the time, so I put my studies on hold, and I totally intended on going back and continuing my studies, continuing to get a PhD. That was what I thought I wanted to do. But, long story short, I never went back to that. I kind of realized that, maybe I wanted to be a college professor for, the wrong reasons. And I realized just recently that, the why wasn't there. It was more of okay, this is something that I know I can do. It's something that it wasn't something that I enjoyed though. And that's kind of why I never went back. But anyway, as active duty Marine, I was bouncing around the world. Remember reading Rich Dad, Poor Dad on a boat between Okinawa, Japan and the Philippines. And I read Cash Flow Quadrant 2. It was a very long boat ride, but like 36 hours. So I read both books, in sequence. And I think the light really went on. All of a sudden it was just like, oh my goodness, I need to start purchasing assets, but I lived in Japan at the time. This was 2004, 2005 timeframe. And I decided—
Brian, it's so funny that you're reading those books on a boat because Robert Kiyosaki, is he former military Marine?
He was a Marine pilot. Yep.
Okay. I thought so, because I know he's talked about traveling the world as a Marine, and it's just funny you're reading these, around
I think
the
he
world
was an
as a Marine.
F4 pilot,
Okay,
but
cool.
he was a Marine pilot, and I guess it was fitting that I was sitting on a boat in the East China Sea, or I think it was South China Sea at the time, but anyway, fast forward, I decided to wait until I was back stateside to start buying not apartments, buying houses.
Mhm.
I remember reading, Rich Dad Poor Dad. He talks about multifamily. He talks about commercial real estate. I just couldn't get myself to believe that I could
Right.
do that.
Yeah. Me either.
So
Yeah.
moved to the States in 2006, probably the worst time in the world to buy. Ended up buying my first investment property in 2007 in Salt Lake City, kind of the area where I grew up.
Okay.
2008, after the crash, I bought my second single family investment home. And then banks, stopped giving me money. They basically
Yep.
told me I didn't earn enough to get another loan. And I just didn't know better. I didn't know there were other ways of financing. I didn't know that I could figure out, how to get deals done. I just thought, well, the one option I know doesn't work anymore. So I'm going to have to put things on pause. But, long story short, fast forward several years later, we had a lot of equity. We were cash flowing. And I wanted to be able to replicate that and keep on doing that at a higher level. And I stumbled upon multifamily, and there are a lot of things that were very appealing about it. I looked at multifamily as, buy one, get many for free. It's not,
Sure.
it's
Yeah.
definitely, as you can attest to, it's definitely harder to buy a multifamily property,
Mhm.
but it's not 100 times harder to buy a 100 unit than it is to buy a single family home.
For
right?
sure. Yeah.
So,
Well said. Yeah.
the money scales, the assets scale, but the work doesn't. So that really appealed to me. And so I got into an educational program, learned the ropes, found some partners, and, we formed a company, which I am actually currently I'll probably be out of that company officially by the end of the week. We've been batting legal documents around back and forth and making sure I's are dotted or T's are crossed. But anyway, with the company that I co-founded, I've been a GP in 9 different properties, all in South Carolina and Georgia. And then outside of that group, GP on one other, and then looking to get into more and more. And we got a couple of them right now on the horizon that I'm looking at coming in as a partner on.
Yeah. Yeah. Thanks for the quick story and like kind of through your progression, Brian. And what I love about it is, that quote of like people overestimate what they can do in a year, but underestimate what they can do in like 5 or 10 years. And I think that's so true for all of us. You started just taking some small steps. I mean, it started with reading a book on a boat as a Marine and going, okay, like this makes sense to me. I kind of want to get into this. And then you start very small, you get one rental house, you get another rental house, prove the concept a little bit. You're making some cash flow. You're seeing equity build. You're going, okay, this thing Robert Kiyosaki talks about, investment real estate. This works. Prove the concept. Okay. But I want to scale it. I want to buy, I want to do 100 at a time instead of buying 100 single family homes. And you get some coaching. Again, another small step, find your partners. Okay. Maybe together we can go do this. You buy one. And I mean, now we're talking about you own 9 apartment buildings. Mm-hmm. That seems crazy. That seems unattainable to, a lot of our listeners. But again, it just because you started by just reading Robert Kiyosaki. That's not unattainable. That's not, unimaginable. Then you went and just bought a single family rental. Anybody can go do that. I mean, not anybody, but with a little bit of education, a little bit of capital. Maybe you go to a capital partner with one guy, one girl, and do it.
At the time in 2006, anybody could have done it. I mean, money was so easy to get. I mean, people talk about how money's been extremely easy to get for the last couple of years, but it's not the same as it was in 2006. I got 100% LTV loan.
What?
On my first rental property.
Wow.
I put $3,000 down because there were some of the closing costs that the lender would not finance into the loan. So I literally walked away with about 103% of the purchase price in loan proceeds.
My God.
And $3,000 down and bought me a $200,000 home. I mean, money was absolutely easy to get in 2006. So, jeez. I mean, nowadays you might need a capital partner because lenders have learned their lesson from that. But man, at the time it was so easy.
But I know that really provided for you and your family, Brian, and kind of opened some doors. I think that probably you and your wife and your family 5 to 10 years ago did not think were possible. Share with us a little bit of just like over the past, year, kind of how your life has changed and maybe how real estate has had something to do with that.
Well, I'll just talk about yesterday and today. I mean,
Okay.
today, my daughter is on a swim team. Okay. Her swim club starts at 10 a.m. and it goes to 11:30. I took my daughter to her swim club. It's at a pool attached to a gym. I mean, it's the local health club. I worked out from 10 to 11:30 and we both walked out together,
Wow, that's
with
awesome.
most
Yeah.
people with W-2s can't do that. Right. And
Yeah.
it's just one of the things where I can block it on my calendar and it's just like, okay, so here's where her swim thing is. I'll take her to swimming. I'll work out, it's right next to the gym that I work out at anyway.
Yeah.
And I'll just do it
Love
from
it.
10 to 11:30 when the gym is completely wide open with not a lot of people there. Right. So, yesterday my daughter had gymnastics and at a time where, most dads can't be there, so I'm typically the only dad sitting on the sidelines watching
Yeah, I've
the
been
little
there.
girls.
Yep.
Yeah. And a week ago there was a day camp that we took all of our kids to. And once again, the only dad there, and it was fun to be able to do all of that stuff. I mean, I still have to work. It's just that I have a lot more flexibility in my schedule.
right.
I'm not to the point to where I'm financially free yet, but it's June and I've already earned enough money this year to be okay until, probably this time next year. Right.
Yeah.
So that's where we're at right now. And it's just a matter of, keeping on, making wise investments and getting into deals that make sense. And I've started investing, when I started in multifamily, I didn't have a whole lot of money liquid. I was able to invest into our first 3 deals, but I've been in 10, so our first 3 deals I invested in, 4 through 9, I wasn't able to, because I wasn't liquid enough. And number 10, I was able to invest in again. But, so I'm also at the point right now to where, the deals that I'm participating in, it's, whatever the minimum investment amount is, that's what I'm going to be putting in, because, I want to make sure that I'm doing the due diligence I need and the other operators to be able to bring other investors to the table. And so, I'm looking at it 100%. Is this something that I want to invest in for myself?
Yeah.
And if it is, I'm putting my money in and I'm going to find other people to do the same thing.
I love those stories of what you're able to do. And yeah, you still have to work, not financially independent. I mean, I count myself just extremely blessed to be in the same exact position where I can have that flexibility, go with the kids, go camping when we go to camping, but like come back and then I got to hustle. I mean, I need to work, but if I'm going to do that first thing in the morning and then 10 o'clock, go do something and come back. That's what I love as well. Cause I love to work. I think you do too. And so it's great to be able to do that, but be able to do it when it makes sense for the family and let work, build on. And not everybody can do that, Brian, but I know you are really passionate about helping others get there, or maybe just get a little bit closer to that point where real estate investing allows them to add a little bit of flexibility. Maybe they could go part-time, maybe husband or wife can go part-time, right? Like that's what real estate can do. Tell us a little bit about Tribe of Titans and what you're doing there, what you're so passionate about as far as teaching others to get into real estate investing.
I want other people to be able to, disconnect themselves, disconnect the time from the money equation. And I think that's the most W-2s, your time is money, or most people who are self-employed, the amount of time they put in is directly related to the amount of money they get out.
Right.
And
Right.
to be able to live the lifestyle most people want, you have to disconnect the two. And I think it's something that can be, fairly easily, not easily done, but if you take the right steps, it's not rocket science, So I created the Tribe of Titans. At first it was just, me writing down all my lessons learned. The podcast was a big contributor, but what the Tribe of Titans is a multifamily community where we would put education and networking together in the same app. I use the Mighty Networks app, and we've got about 200 people. It is a paid subscription service. It's $40 a month. It's very, very reasonable. But there's about 200 people in the group who all have the same goal. They're trying to essentially get out of their W-2, and they're using real estate as a vehicle to be able to buy their own time back. So that's what the Tribe of Titans essentially is. We do have, like I said, a lot of content in there, a lot of my own lessons learned throughout the last several years of doing this. And like I said, some really, really good people in there. And like you, I have a podcast, because I bring two people on every episode. So, I've been able to reach out to, a lot of people who've been on the podcast to kind of create the backbone and the framework of this community. So anyway, long story short, if you're a working professional interested in doing what Lee or I am doing and getting out of your W-2 in 3 to 5 years, the Tribe of Titans is the way to go. You're going to have network, you're going to have community, you're going to have education, and you're going to have all the resources you need to get there.
Yeah, I love that, Brian. I mean, like you put out there, the separating the time for money aspect and just showing people. I mean, to me, this is what the Rich Dad Poor Dad does. This is what Robert Kiyosaki kind of did for you and I, kind of that light bulb, where, hey, you still might do that. You still might trade your time for money, but you can also do something else, and that's get your money working for you. You can trade, put your money to work and let your I think Warren Buffett was one that said, if your money's not working for you, you'll work till you die. Or if you're not making money while you sleep, you'll work till you die. Yeah. Right. And so it's just adding that. It's not necessarily like you and I, Brian, have been able to jump into it full time. That's not for everybody. But if you can just understand that concept and start doing it a little bit, man, it can open things up for you. Like you say, just start detaching a little part of you, detaching that idea that the only way to make money is trading time for money. If you can get past that and understand that there is another way, and you start playing that game as well, it can change your life. I mean, it can really open things up for you.
And I'll tell you, I'm not anti W-2. I mean, I went through withdrawal symptoms, giving up a paycheck, and not having that paycheck hit every month. It's just like, okay, all right, we prepared for this.
There's some comfort in that.
Yeah, we've got, and we had a 6-figure amount in an emergency fund before I left the Marine Corps. A lot of that came from what I earned from multifamily, but now it's just a matter of, making appropriate draws at appropriate times and making sure that money stretches out. So, I mean, there's obvious benefits to keeping a W-2 if you have one. And I'm not an advocate of leaving a W-2 too early, is kind of what I'd say. But if you're just looking to augment your W-2, passive investing is probably the best way to do that. If you're looking to eventually get out of your W-2, actively investing, doing what Lee or I are doing is the best way for the listeners to proceed, I think. Right.
Well, and then the other thing you said about Tribe of Titans, Brian, talking about the education and the networking, kind of the 2-in-1. That's what you get, because that's what it takes. I mean, through your story, mine is very similar. You pick up a book, you start listening to podcasts, and you educate yourself. And number one, you're deciding, okay, this makes sense to me. I want to do this. But then also, okay, how do you do this? How do you get started? You learn from others that have already done it. But then a lot of times, especially if you want to go beyond just a single family home, or, just building a small portfolio in your own hometown, you're going to have to network. You're going to have to find maybe a mentor, maybe it's a paid mentor, and then maybe a partner or two. So I love that. The fact that Tribe of Titans does those two things, that's what everybody's going to need if you really want to
give you an example from this morning. And I'm one of those guys that, while I'm at the gym, I do pull out my phone, which, some of the, gym enthusiasts look down on, but I got an email from a guy that I met at a conference a couple of months ago. We had a couple of calls afterwards to see if, I'm interested in coming in deals as a key principal. If anybody's, if you don't know what that is, basically it's a cosigner or a loan guarantor. But we had a couple of calls, and he emails me this morning and says, hey, I have a deal under contract. It's a $3 million raise. He's like, we've got 2.5 committed. We need another 500,000. Do you know anybody that can help me? And I'm like, join our tribe. I mean, here's 30 days free, so I gave him a link that gives him 30 days free. He posted in the tribe, hey, I've got this deal. Here are the high level details. Can somebody come in, be part of the GP and raise, 500,000. Right. And he's got 3 calls lined up. And that was since, it's 1 PM. That was since, 10:30 this morning. So, don't underestimate the power of a group like this, because,
Yep.
he immediately came in, he had a need. He's like, I need, a capital partner. I need somebody in the GP that can help raise capital. Now there's some SEC concerns, and some broker dealer laws that they've got to navigate as well. And, I provide all the information to make sure that they steer clear and they're completely compliant, but,
Yep.
end all be all.
Yes.
There's a lot of people in there that have, abilities to help out, and it's
Yep.
just a matter of, hey, this is what I need, who can help. And people come together, they do deals, and it's a pretty awesome thing to watch.
Yeah. How about for you, Brian? I know you're still looking for deals. Like you mentioned, you're interested in being the key principal, come in, sign on the loan, kind of have the experience, have a balance sheet with the investments that you've made. You also, I know, have a good community. You could probably bring some investors with you. What do you think of investing right now, Brian? I mean, everybody knows that the economy is a lot different than it was 12 months ago, right? Inflation rages on. The Fed is now raising interest rates. We had one quarter of negative GDP, maybe heading for another one. So technically we'll be in a recession. All these things. Is now still a good time to invest in real estate? Still a good time to buy apartment buildings? Yeah. And if so, what are you looking for? What are you doing? Just,
we've quoted Warren Buffett a couple of times today, but he's also said the best time to plant a tree was 20 years ago. The second best time to plant a tree is today. Mm-hmm. And I still believe that. And, we are going, I believe we're going into recession. You've said the same thing. Yeah. If we're not, if we don't have negative GDP growth this quarter, and it's, 10 days from the end of the quarter right now, we will probably be in a recession soon, the way the Fed's raising interest rates right now. So,
yep, I agree.
What I know from past experience, and I'm projecting the past into the future, but real estate tends to do fairly well in downturns, especially commercial real estate. It loses less value and it recovers faster than any other asset type, right? So when you're looking, and multifamily especially does that, because it has intrinsic value and it's always in demand. So there's a lot of good reasons to still invest. It doesn't have near the volatility of the stock market. I mean, year to date, the stock market's down about 22% right now. Real estate has held firm. They haven't gone gangbusters like they had in the last 2 years, but real estate's held firm right now. Yep. And if real estate does dip, it's not going to be 25%. It's 3 to 5%, so, and it's probably going to be geographically based as well, where, maybe your Phoenixes and your Boise's drop a little bit because they were so hot last year. But really what I think is you have to have a little more solid foundation, so I don't think you want to leverage yourself out to 85% loan to value. I think you want to come in where you're putting more money into the deals, so instead of like I did in 2006, instead of getting that, 103% of the purchase price from the bank, now you want your bank to come in with maybe 70% of the purchase price, and then you're putting in a 30% down payment. And what that means
more margin, right?
Yeah. And so basically you have a lower debt service. Your monthly payments are lower, right? So, instead of, and that's one way to combat the rising rates is, you come in with a lower loan amount and you're going to have a more affordable monthly payment to the lender. All right. Sure. And so that's going to let you weather the storm. And, these assets they're going to perform. They're going to cash flow if you buy them right. Buy them right. Like I said, come in with a smaller loan from the bank, put in more of your own money. You're going to cash flow a lot more. Now, the investor returns are going to not quite be as awesome as they have been for the last 5 or 8 years. But they still might, we don't know what's going to happen in the future, but I do think that, I'm preparing investors for, 12% annual returns instead of, 15 to 18. Mm-hmm. And we've been projecting 15 to 18 for the last, 4 years. And we've been giving back somewhere between 20 and 50, So I think, right now we're projecting, 12 to 15. And I think most people would be happy with 12 to 15 at this point.
Yeah. One way I think about it, Brian, is like most of the people that are thinking about investing, especially passively in real estate, they're kind of comparing it to maybe investing in something like the stock market.
Yeah.
And yeah, we've got some properties and maybe it's not a great time to sell and maybe they're not going gangbusters, but we haven't lost anybody's money, right? We haven't lost, any money at all. And sure, maybe returns a little bit less, but yeah, if you're down a quarter, if you've lost a quarter of your wealth through the stock market this year, then that's why I agree with you totally, Brian. It's still a good time to buy because you got to think what's the stock market going to be doing? I kind of still think we have some pain ahead, and I don't think it may take a while to have good gains again. So I still think it's a good time. Maybe if you knew exactly when this market was going to kind of, as far as commercial real estate, kind of bottom and they were going to be okay, then you could stay in cash and pick the exact right time to buy. But nobody can do that. You try to do that and you sit around and wait for that crash, wait for the bottom forever. Because I mean, I can remember back in 2016, 2017, people thought we were going to crash, right? And so you sit there and wait, and you wish you would have bought back then. Right?
Yeah, no
crash.
COVID, same thing happened to COVID. I mean, everyone was like, "Oh my gosh, COVID! We're gonna wait." We closed on 5 properties in 2020, and
it's a good thing. And those are.
It's a good thing we did, and a lot of those properties have performed, and we sold one of them. The first one that we bought post COVID, we've already sold, and that one produced high 20% average returns for our investors. We have another one we have 2 under contract. We're still, numbers are still kind of fluctuating based off of the prepayment penalties. Those are a moving target, but on one of them, we're going to provide around 30% annual returns. On another one, we're going to provide closer to 50% annual returns. So, I mean, and those were purchased in a time where a lot of people sat back and said, wow, I don't know what's going on right now. I'm not going to buy. So I think the fundamentals for real estate investing are still the same. And what I mean by that is you're buying something with intrinsic value. You're buying something that essentially is always in demand. Multifamily housing is always in demand.
Right.
And, you're basically buying a stream of income. And what's different is how much you're paying for that stream of income.
Sure. Good.
But,
well said.
What you don't have is the volatility of the stock market, because it takes, 60 to 90 days to transact in this space. You're never going to have the same, crashes that maybe Bitcoin saw, right?
Yeah. Right.
You do see them a little more in the single family space. I mean, the price fluctuations in single family are a little bit wilder than multifamily, but you have a lot more price stability. So the fundamentals are still there, price stability, the cash flow and everything else there, the supply demand. We're in a supply shortage nationwide too. So there's lots of good reasons to still invest.
Yeah. I couldn't agree more, Brian. Hey, in summing things up, I always like to ask my guests, what's the key ingredient to be a successful real estate investor? You've been doing it for a while now. You've got the Tribe of Titans. You're teaching others to do it. What would you say is maybe the key ingredient to be successful?
You gotta wanna. That's it. You gotta want it. I mean, it's not easy. There's a significant barrier to entry. I think that is the biggest difference between a single family home and a multifamily property is the barrier to entry. Sure. Like we both talked about earlier, it's fairly easy to buy a single family home. 64% of Americans, live in an owner occupied dwelling, so if 64% of Americans can purchase a house, they can also purchase an investment property, right? So there's almost no barrier to entry getting into the single family market. In the multifamily market, there is a barrier to entry. And, the banks are looking for, more than just income to pay the loan. They're looking for net worth and they're looking for experience. When you buy a multifamily asset, you're buying a business, and banks want to make sure that you have the business sense to handle it. So, basically, a lot of people, I see a lot of flashes in the pan, and what the flashes in the pan lack is they may be too comfortable in their current job, or it's too much work, or
it takes grit.
It takes grit. It does. It takes a little bit of hustle, and
stick with it.
You gotta wanna is the answer, and that's the secret ingredient is you gotta wanna, and if you really want it, you're going to make it work. You're going to figure out how to assemble a team that has the experience, that has the net worth, that has the liquidity to qualify for a commercial loan, which is going to get you into a property, and that's basically the biggest barrier to entry is qualifying for that commercial loan. And once you meet the qualifications for a commercial loan, the brokers are much more likely to talk with you, and it's kind of the two go hand in hand for a reason, because the brokers know what it takes to close. And if you don't have what it takes to close, the brokers aren't going to speak with you.
Brian, as I know you're a man of faith and family is important to you, while you're having success in real estate investing, what's the key to maintaining your priorities and making sure, you're following God and you're serving your wife and kids and making sure you're keeping your priorities straight?
It's a daily choice is the answer. Yes. A lot of people say, I made a choice, 40 years ago or 30 years ago, or, I was baptized into my faith in 1985. I was 8 years old. Right. So, I made a choice then, but it's really, you have to make the choice every single day. And that's what it comes down to.
Yeah. Yeah. I couldn't agree more. It starts for me in the morning, getting in the word and I kind of fill myself with that and deciding that day. Cause we need grace every morning, and good stuff, Brian. I appreciate that. You mentioned a couple of books, but anything you're reading lately?
The one I've been going through right now is Expert Secrets by Russell Brunson. He's the ClickFunnels guy, and based on the book, I think we share a religion, I'm a member of the Church of Jesus Christ of Latter-day Saints, so the other books that I'm into very frequently are the Bible and the Book of Mormon, and I think Russell Brunson's, same faith, because he puts an example from the Book of Mormon into his book. He doesn't say it's from the Book of Mormon, but anybody who knows it, knows the example.
Well, great, Brian. Always great to catch up with you. Appreciate just hearing your story, getting an update. Love, what you've been able to do through real estate investing, and then what real estate investing has done for you and allowed you to do as far as kind of retiring, moving the family across the country. Pursuing your family's dream and all that. And
for anybody interested, we are running a 30-day, free trial period right now. So website is thetribeoftitans.info. And, for the next couple of months, we're going to keep that 30-day free trial period open for anybody who joins. And, eventually that's going to go away because we've hit to the point to where I don't think we need it anymore is the honest truth. But
sure.
So anybody could take action quickly. You can get in with that 30 days free, check it out before you actually pay any money.
All right, Brian. Well, thanks so much, man. It's been great. Thanks for coming on the show. Take care, man.
Thank you for joining us for another great episode. I hope you'll take action on what you've learned today. If you enjoyed today's show, please consider leaving Lee a 5-star rating and review. And check him out on threefoldrei.com. Until next time, 1 Timothy 6:17.